Good morning, everyone. Welcome to today's installment of our Social Enterprise Conference at Columbia University. I'm Sandra Navali with the Tamer Center for Social Enterprise. So welcome again to all of you rejoining us for this next installment of our digital event series. For those of you that are familiar with us, you know that the Tamer Center was started about 3 decades ago. And, you know, when we became the Tamer Center only about 5 years ago, our mission expanded to be across campus focused on interdisciplinary thinking and looking at social innovation and social entrepreneurship solutions to the many crises that society and the environment faces. I mean, what a year it's been with the elections coming up and climate change, racial inequities and the worldwide protests. The ongoing economic downturn and income inequality and wealth inequality getting worse. And so the topics that we cover under social enterprise and the Tamer Center are never more relevant than they are today. So just a quick reminder, please go out and vote, exercise your right. It's as well as protest and voting, which are two critical, important things. Today, we're going to explore more deeply about what we can do as organizational leaders and builders and startup leaders to affect institutional change, especially around topics such as systemic racism and inequality, both income and wealth inequality. And what are some really innovative things that people are doing around the country and around the world to address these topics. So I'm really excited today to kick off this series again. I wanted to just show again a slide that I did show at the last series, but just to reiterate what we mean by social enterprise. Are you able to see my screen slide? If you can just give me a thumbs up. So this is what you've probably seen versions of this type of spectrum of capital before, but as we think about what we mean by capital for good at the Tamer Center for Social Enterprise, we're interested in capital in all of its forms and how it is expressed from ESG investing through to impact, through to philanthropy. I mean, if you think about the spectrum and all the different ways that capital is actuated, when you're trying to solve a social environmental problem, you use all the tools at your disposal, not just one. And that's why this conference is intentionally quite broad in exploring and deep diving into all these different areas. We think we need more of all of this intentionally applied to solving the huge social and environmental challenges that we face in the world today. I'm really excited today to share the sort of and introduce our terrific speakers. We're going to kick off today looking at how people have been generating sustainable solutions to systemic challenges and problems around racial inequity, the deep racial inequities that exist in the US in particular, but also around the world as the worldwide protests have shown. We're going to hear from some terrific people that are using capital to generate more equitable and just solutions in society to people of color and marginalized communities that haven't always shared in the wealth generation and have experienced even deepening income inequality, especially during these times of pandemic. We're also going to hear from some terrific female entrepreneurs of color and hear about their founding journeys, how they've found funding and what the challenges and also some of the solutions that exist in the fundraising landscape. So we're excited for that second session. And then the final session today, we're going to be looking again at this issue of systemic inequality, especially facing America's heartland, with a terrific author, moderated with Professor Bruce Usher. So with that, we're running a little bit early, but I would like to warmly welcome our first star student leader, Michelle. I met you as a prospective student, and when you meet people who are coming to Columbia Business School, you see people who have a spark and a passion. Not only was she engaged around these topics before business school, with her work experience, but also outside of her work. I think, Michelle, you demonstrate some of the best of what Columbia Business School and Columbia University can help in terms of building and training and educating the next generation of leaders who are going to, I think, do amazing things in the world to help us close the gaps in areas like racial inequality and wealth generation and the myriad of other things that I'm sure you're exploring while you're here at campus. So with that, I'd like to turn it over to Michelle to welcome our next session and panels and speakers. And thank you all to all the organizers, speakers, and my team, Diana, Matan, Hannah, and everyone else who's been involved. It's a terrific day, and we're really pleased to see all of you join us this morning. Thank you.
Thank you, Sandra. That was so kind. Good morning, everybody, and happy Friday. My name is Michelle Dancinghani. I am a first-year MBA at Columbia Business School. I'm also a recovering founder and an aspiring entrepreneur with the goal to have an investment fund focused on investing in early-stage underrepresented founders. And just to give some context, by 2065, this will be a minority-majority country. And currently, women are making household buying decisions. However, only 2% of funding goes to women. So in my opinion, there is a lot of money being left on the table and a huge opportunity to invest in these communities that are innovating solutions for the future. So you may understand how excited I am to be introducing our moderators and our panelists. Y'all, we are standing on the shoulders of giants right now, and we're going to get the opportunity to hear from them today. And before I introduce our panel, I think it's extremely important to provide some context around this conversation. So only 3% of all venture funding goes to Black and Latinx founders. And as venture capital has quadrupled and the growth of diverse businesses has skyrocketed, the disparities of who is receiving and who's cutting the checks have long been known in the space. However, the murder of George Floyd and the impacts of a global pandemic on marginalized communities have brought to the forefront the persistent problems of racial and economic inequalities that have long existed in this country. And this panel today will explore how social impact capital that flows from asset holders to Black and brown underrepresented founders and entrepreneurs can be accelerated to generate systematic solutions for diversity, equity, and inclusive economies. And so today we're going to be discussing how impact investing can be a tool to generate economic opportunities and mobility for Black and marginalized communities. And our conversation will be kicked off and moderated by Jenny Tolan, co-founder of Level, a multiracial network of professional women focused on investing in Black women entrepreneurs. Level members participated in an 8-week women's equity circle to build relationships across racial lines, learn about angel investing, and pool their money to invest in Black women-owned businesses. Jenny is also an alum of CBS, so the future looks bright for me, y'all. And then to introduce our panelists, I have long loved both of these women, so even having the opportunity to introduce them just brings so much joy to my heart. Melissa Bradley is the co-founder of a venture-backed Ureeka, a community where small businesses gain unprecedented access to expertise needed to grow their business. She is currently the managing partner and co-founder of 1863 Ventures, whose goal is to build and create more than $100 billion of wealth by and for the new majority, women and people of color entrepreneurs over the next 10 years. Melissa also serves as an advisor for New Voices Foundation and New Voices Fund, as well as the Halcyon Fund. She is the former co-chair of the National Advisory for Innovation Entrepreneurship and was recently named one of the most entrepreneurial investors. And Kesha Cash, our next panelist is the general partner at ImpactAmerica Fund. And this is a huge deal, but they have recently closed a $55 million venture capital fund. And this is likely the largest fund ever raised by a sole Black woman general partner. And it's an important milestone, especially in a year marked by expansive calls for social justice and economic justice. But really, this is only the beginning. She was recently named one of fastest companies' 100 most creative people in business, and is the subject of a Stanford Graduate School of Business case study on forming a successful impact venture capital fund. She has nearly a decade of experience in impact investing at Jalia Ventures, a $5 million fund that she co-founded with Josh Mailman. She made seed investments in mission-driven companies such as Red Rabbit and Connex. She is also was an investment associate at Bridge Ventures in the UK and a Columbia MBA. So now I'm going to turn it over to Jenny to get our conversation started.
Thank you, Michelle. What an incredible introduction. We're so grateful. It makes me want to go back to business school and have the energy and excitement that you're doing incredible things at CBS right now. So I'm excited to know you. I feel the same way. What a way of saying standing on the shoulders of giants. That's how I feel. I've been doing this work for about a year, specifically in the investing space. And so to have the chance to speak with you, Melissa and Kesha, today is such an honor for me. And congratulations, Kesha. What an exciting announcement this same week that you're on the panel of closing your fund. And Melissa has been doing this work for decades, so we have a lot to learn from her. So with that, I want to jump right into hearing from them. And we were talking about this the other day, and we thought, impact investing, it's a word that's used all the time now. It's thrown around in a lot of different places. And so to ground us for this conversation, I'd like to hear from both of you. How do you define impact in impact investing? I don't know which.
Let's keep you start since she's the business school grad.
Thank you, Melissa. I typically defer to Melissa and follow Melissa, but I will kick this off. Hi, everyone. It's really great to be here, and the timing worked out perfectly to close ImpactAmerica Fund 2, because the work of ImpactAmerica Fund really started at Columbia Business School. So that's a much longer story. So I'm grateful for the Tamer Center. That was a different name then. It was just the Social Enterprise Center. So it's endowed now. So I'm excited about that. And Sandra Navalli and the team there and all of the support that I got in order to do the work that I'm doing today. ImpactAmerica Fund defines impact investing in a unique way, in that we are structured like a traditional venture capital fund. So we go out and we raise our money from LPs, investors, and it's structured. We have a 10-year life, meaning our goal is to return that capital plus a return within a 10-year timeframe. The unique part in where the impact piece comes in for us as impact investors is that we require for any company that we invest in, as we are assessing the company, as any investor should, for the potential financial upside, the track record of the founder, the historical performance of the company, the market sizing. In addition to those layers, we look at whether or not we believe, as this company scales and grows, inherently in the business model, does the business model drive impact for low and moderate income communities in America? And we put a finer point on that in that while we are not exclusive to people of color, in terms of those communities, we certainly want to be inclusive of. And what we've realized through this work, to be inclusive of, you have to be intentional about it. And you have to assess that part of it during your diligence process.
So first, let me be among the many to congratulate Kesha. I actually, when you started talking, I remember when you were not too long out of Columbia Business School and you're working with Josh and the conversations we used to have. So it is amazing and thrilling to see you here, just as a friend, but also as a Black woman. And honored to be here. Anytime I get to visit an esteemed university, I am humbled. So thank you for having me. I was trying to figure out who said it, but I was at a conference, an impact investing conference, and someone said, all investing has impact. And so from our perspective, particularly at 1863 Ventures, where we now have 1863 Venture Fund 1, we're trying to keep up with Kesha, we define impact two ways. So we look at the impact that we can have as an organization, and while our programs, our accelerator programs focus on women and people of color, we are making an explicit intent to be able to invest in entrepreneurs of color who have graduated from our program. And so that is impact, in that it is filling a significant gap and void that we know if the dollars had been invested in parity as they are with their white male counterparts, we'd have over 1 million jobs in our community. And for us at 1863 Ventures, that is a driver of how to build wealth, not just for individuals, but for communities. When we look at the companies that we invest in, and we started investing last year, we look at companies that do three things. We look at companies that provide job creation within low income or historically marginalized communities, whereby no other industry would have been there. So we have folks who are bringing community kitchens to neighborhoods and creating jobs as they sell their products through Target. So that's one primary driver. The second thing is we look to invest in individuals who have also been historically marginalized. And so that is a wide range of entrepreneurs of color, but also either because of their educational backgrounds or how they grew up or being locked out of the banking system. There's several nuances in there. And then the third thing is we look at what does the business do? Now, we don't necessarily use a strict environmental screen, but we do want to make sure that we're involved in businesses, and I'll borrow Kesha's term, that are not extractive from the Black and brown communities of which they are serving. So that probably you could think of all the sin stocks that would come in there typically, but there are others that we're mindful of. This is something that has a longer term sustainable impact from an industry perspective, and not something that is just a quick win that's going to make a bunch of investors popular. The nuance, I will say, last thing in terms of how we make investments, is that we are a venture fund, but we will make both equity investments as well as revenue-based financing investments. We recognize that for some entrepreneurs, being and having to maintain a cap table oftentimes means they are no longer on it after that second or third round. So we are mindful that because of a relationship we have with Target and a few other retailers, we really find ourselves of just needing to be a 2 to 3 year gap funding for these individuals. So we're doing revenue-based financing to be able to get them from a couple of stores to several hundred stores, and hope that that takes them on a trajectory where they can ultimately maintain a significant ownership of the company.
Thank you for that. That's actually a question I'm going to get into in a minute about forms of capital. But before that, I wanted to think, since we all are here as a part of Columbia's conference, and a quick plug, it was when I was at Columbia, I was the chair of the Social Enterprise Conference. So it's fun to come back as a participant, less work than planning it all, thanks to Sandra and Diana and the team. But, we're in this moment of these last few months of Black Lives Matter and a racial reckoning, and more vocal support from places like universities around racial justice. And so it's interesting, Columbia, it was very exciting that Kim Liu was named the investment management company CEO for Columbia after 13 years as VP and Chief Investment Officer at the Carnegie Corporation. I wanted to, Melissa and I, when we were chatting last time, talked about Yale. Actually, Michelle brought this up. Yale made an announcement also this week that its $31 billion endowment really needs to be directed to funds that have more women and minority leadership. And I wanted to ask you both, what, there are some positives coming out of this moment, and what are some of the bright spots? But also we talked about the complications, what might be missing. We can make a big announcement, we can make some of these changes, but it might be missing some things to actually generate change. Melissa, I don't know if you might want to start. We were talking about this week.
Yeah, I think I'll address the kind of educational aspect and then just in general. So I have the privilege to be a professor at Georgetown, and we too made this announcement. And I say that in a good way to celebrate these announcements. I think particularly amongst the education sector, it's not just the announcements, right? It is the system itself. I've been in this kind of impact investing space for a while and find this ongoing thing that the higher level investor has this intention, but then there is a layer of consultants that kind of temper the enthusiasm that oftentimes doesn't allow the dollars to trickle down. So I think the investments are a great signal effect, but I do think that we cannot underestimate the kind of restructuring and reorientation that needs to happen in the space in terms of how dollars flow. I don't disrespect or undercount any of those commitments, but there is a system that has not just stopped money from going, but I would say systematically made sure that there were certain types of managers that get through that aperture that continues to get smaller and smaller. And then I think if you put the kind of vein of universities in light of all these other commitments, I think, they're great. We have lots of conversations in our office about them. I do worry that one, they're going to run out and they will be a drop in the bucket and certainly by no means course correct over 400 years. I think two, they reflect, I'd like to believe, good intention, but don't necessarily reflect a real sense of market sizing. African-American women are the fastest growing segment of entrepreneurs and Latino businesses are the fastest growing businesses. When you have Citi Ventures or Citi come out with $16 trillion as the cost of racism and over 500 billion lost, I don't know that we've hit that number yet. And so we've got some big gaps to fill. And so I try to remain optimistic in terms of what that means. I think the new dollars have given rise and hopefully, Kesha benefited from that lift, the investments yesterday that PayPal announced, some of those funds will benefit from that lift. But I hope that this is not more than just a drop in the bucket because we as fund managers and GPs, we're trying to catch up, right? We're not out here looking hard. We are trying to catch up for the years of entrepreneurship that has been taking place in our communities that is still waiting. So the top of the funnel is pretty big. And so I would dare say the top of the funnel is probably 10x to the dollars that have gone in. And so I do hope that where there's a chance for folks like Kesha and others to say, look, we can make money. Now you need to help us catch up for all of the costs that have been missed over at least 15, 20 years.
Yeah, building on that, the catch-up part, I was speaking to someone the other day and I said, while I am excited, I think there is a window that's open and we need to move fast and quick through that window while it is open and think about those long-term strategies to sustain the momentum, even if and when the window closes. But I said it's hard for me while I'm excited about these announcements, and I am. It's hard for me to get too excited because we're just trying to get to the baseline, right? And so it's like if I'm paid 60 cents on the dollar as a Black woman to my white male counterpart, do I get excited that I actually get my full dollar when I should have had my dollar already? And so it's I don't want us to certainly, we need to take advantage of the moment and move very quickly in the moment and really demand more for the moment. So the buck doesn't stop with a few announcements, a few fund managers getting funded, and we never see the massive systemic change that this country needs to see in order to really address the economic inequality gaps in this country. When I was a student at Columbia, I had the opportunity to serve on a special committee. And I'm forgetting the name of this. It had a very long name, and I hope it's still in place, but it's basically a committee for social responsible investing. And we advised the endowment, and it was a committee made up of undergrad and graduate students. And what gave me hope on that committee was honestly the energy of the undergraduates and some faculty as well, but the energy of the undergraduates to walk into our open meetings and to demand change via the endowment. And we know that this happened across universities who divested from South Africa in order to have some impact on the apartheid, anti-apartheid movement. And if you think about the effect that has of keeping corporations accountable, and there's proxy voting. So there's a lot more that we need to do if we're thinking about how to impact racial inequality in America. We need to hold corporations accountable. And I say this to a business school audience. There's an organization, a great organization, another example out there. It's called the Rainforest Action Network. And I've had the pleasure of going to a number of their galas via some of my investors and colleagues. And I was overwhelmed by the energy of that organization. It's been around for decades now, and their ability to hold corporations accountable for the negative effect that they're having on the rainforest and the environment. And I remember sitting in those galas years ago thinking, we need to hold corporations accountable for the negative impact that they're having on communities of color in this country. So there's a lot of work to do. There's a moment in time, and I'm excited that there's an awareness and consciousness about what needs to happen.
Yes, thank you. It reminds me of the next thing I was going to bring up, which is I read a really interesting article posted by an entrepreneur who is the founder of Bright App, Narissa Zhang, and she wrote that she read all these announcements by VC firms. There's an article in TechCrunch, VC firms rush to support Black founders and investors. And then she said, great, I have a revenue generating startup. I'm going to go and approach and try to raise money. And first she looked up all those VC firms in the article, and none of them had contact information on their website, or very few did. So there was no way to find them. Then she kind of worked LinkedIn and all her connections and tried stuff and reached out to a ton and didn't hear back. These are the same investors who had announced that they were going to support Black founders specifically. And then she actually wrote that she was married to an Asian man who's an engineer. And when she used his LinkedIn, she was able to get more responses, but still it really led to a lot of dead ends and not a lot of feedback. So I wanted to ask you guys both, there are these big commitments. There are challenges in, I think Melissa was mentioning, Black women start businesses at 3 times the rate of other women. There's a huge entrepreneurial, growth and number of businesses out there. Thoughts on getting access to capital, making changes so that can open doors. It's a tough one.
It's interesting because we're intentional. If you go to our website, you can submit your pitch deck and information about your company, and our small team of 6, we review all information that's submitted through our website, and that's really intentional because we do want to democratize access for folks to get access to, even if it's just reviewing and giving feedback, and we reach back out to everyone. It may take us a little time, but we try to get back to everyone. It's because it's not in venture capital specifically. It's a very exclusive asset class. This is private money. The firms that are established write their own rules. When you're raising a fund, your contract with your investors is an agreement you all make up. And they're industry standards, but it's the entire space has created their own rules, and it's highly networked, and they tend to invest with people that they know, right? And as you get into the space, not justifying any of the exclusiveness of the space, but if you're writing someone, multi-million-dollar checks, you certainly do want to know who they are. We do that ourselves. We are connecting dots between our networks, between who we know that knows the people that we know. We have a fiduciary responsibility to our investors to ensure that we're investing that capital in a way that's prudent and in a way that we believe, these founders are honest people, et cetera. Now, the problem is when you're operating in a system where if I don't know you and then I have assumptions about you and I never give you an opportunity to enter the space because of that, then we end up where we are today. And there's a lack of diversity of women and people of color in venture who have very different networks than the majority players in venture today. So by simply increasing the level of diversity, you obviously increase who gets access. But it's a nuanced game of who knows who, who's networked with who went to school with who. whose kids are in school with whose kids. You know, that's how venture capital works.
Yeah, I'm not sure that I have much to add to that. I mean, I think that there are, I think I, for one, particularly in my undergraduate years where I think all of us try to revamp the system, have spent a lot of time trying to figure out how to make the systems we have work better. And I haven't come up with an answer except to try to just be in the game and be present. I think one of the challenges, speaking personally, that I've come to have to wrestle with as an investor is, for me, my culture and how I care for Black people and how people care for me is just all about community. Like, I thrive and I have survived and gotten this far because of community. Capitalism is such anti-community in some ways, or at least the current form of it. It is very much exclusive. It is not endearing. It is not engendering of different types. And so, the hope is that when we make our investment, how we make our investments is that you have to be, we're somewhat restrictive, and you have to have come through our program. You have to have gotten to know us and vice versa, because we have many folks that we say, we're probably not a good fit for you. But we try to leverage kind of how important culture and community are within the entrepreneurs that we work with, which somewhat is contradictory, which is of the field, which is meant to be exclusive, which is focuses, this gentleman named Stephen DeBerry, and he always says, I'm done with the oneness, where I walk in and I'm the only one. And so I do think that there's something to be said for the ongoing challenge that many of us will have in this space, and that we want this to be collective. We want this to be communal. Someone asked me the other day, like, are you worried or concerned, or will there be competition amongst all these new funds focused on Black and brown founders? I was like, absolutely not. Like, do you understand that the hole and the gap is huge? But I had to listen who that came from. And I was like, I wish for the day that Kesha and I are actually competing for each other. At this point, Kesha and I are just trying to fill the gap. But so I do think that we have to acknowledge there is something in the current system that is just very different from at least the cultures and communities that I care about. And how can we really bridge that gap so that money is a means to positive ends, as opposed to a check the box moment that we're having right now of who I invested in. And dare I say, as one that is just solely focused on these kind of churning financial returns, which in some cases has left our communities devastated because of that investment thesis.
Yeah, I mean, I think it's the competition question is hilarious to me, and people who don't know how connected we actually are for years, for decades, right? and how much we are all collaborating and working together. If when I see a deck, I look at the deck of a new fund manager, and I see a lot of the decks, and I talk to a lot of folks. Typically, I'm either the advisor in a deck or Melissa is. So I just looked at the deck, Melissa, the other day that one of my LPs sent me, and I'm flipping through, and I was like, oh, I haven't met this team. And I looked, I was like, but Melissa has. That's how small the community is. So it's laughable to think that we're at a point of competitiveness. But I'm certainly glad and thrilled. I know I advise a number of emerging managers, and I am myself an emerging manager still, and Melissa's doing the same work. So I just needed to put that out there.
Yes, it's funny. Actually, I'm in the same situation because Level, we give 10 to 20K investments to Black women entrepreneurs. And one of our founding members, who's another CBS alum, just started her own company called Guava, which is about investing loans in Black entrepreneurs. And we're like, awesome. If we can send our 10K to you to get another 10K, like, please, right? So I appreciate that. There's such a gap in money. The more of us that can channel funds in that direction, the better. And I know we want to get to audience questions. There are a lot coming there, but I just was going to say one last, which actually is on that note, on the other end of this. In the description of today's panel, they talked about disparities both in who's receiving and who's cutting the checks. So I just wanted to, at Level, we're working a lot on bringing all types of people into investing for the first time. And we've been struggling a lot with this accredited investor piece that, to be a private investor, for those who might not know this, you have to make over $200,000 a year for more than 2 years, or have $1 million in net worth. That does not include your house. I mean, it's literally prohibitive if you have not inherited significant wealth which you can only do if you are, I mean, the generalization here, but if you are a white person or if you're a person of privilege in this country who had generations to inherit. So I've been so upset with that disparity on the investor side. And I wanted to ask both of you quickly, I mean, it's a really tough nut to crack, but if you're seeing anything around opening up for investors, more diversity, people of color, women being able to become angel investors, and then also a little bit more for both of you in your experience of being a Black GP in the impact world. Melissa and I were talking a little bit about the Black tax, but how do we open up to investors? And then what is the experience of being an investor lead as a Black woman in the space?
Yeah, so I guess there's a couple of things, because I've been investing for a while. So I think that there's, from a Black investor perspective, I would say that I've been fortunate to be surrounded by Black investors for a long time. And that's probably because I went to Wall Street. And I think what happens is there's, I forget the number, but there's several thousands, not a lot, but several thousands of Black people that have been investing for a long time. Now, they tend to represent certain sectors and they've achieved a certain level, but they're out there. What happens is we oftentimes, though, don't get counted because we don't belong to angel groups. When I had my first exit, I cannot tell you how many angel groups knocked down the door, say, come join, come join. And A, I felt there was a diversity quotient, and B, they weren't investing in the kind of entrepreneurs that I wanted to invest in. So I would say, I think that while our numbers still pale in comparison to our white peers, there is an active Black angel network that I think is slowly growing. And we tend to stay under the radar screen. And we tend not to belong to groups, not just because they don't necessarily are aligned with our vision or mission, but I think because of what you said, right? The Black tax. By the grace of God, as soon as I finished and started working at Wall Street, my income went up. But just because I make it the top line, I was still taking care of my mom. I was taking care of cousins. I think most of us have a reserve fund for the special cousin who needs some assistance because they may get in trouble, or the cousin who has no health insurance but is working their butt off. And so how we allocate our money is very differently. And I've spent time with two particular angel groups lately trying to say, look, your diversity efforts are wonderful, but you need to understand that some of the requirements you have for us to be members in terms of the consistency, that's just not how we live. Because the system and the infrastructure for Black folks in this country is broken, and it is that relative who happened to make it, whatever that means, is forced to fill those potholes when our families hit them. So I do want to say that I think we're out there, but there is not the same level of consistency that we're able to have. I as a Black GP, I think I have two primary responsibilities. One is to maintain my fiduciary duty, but also do it in a way that aligns with my values, which is helping communities that I care about who have been left aside. And so if I don't find an LP who supports that, then we're just not a good fit. And respectfully, we've turned down a lot of money lately to say, like, I just don't think this is a good fit. And the second thing is I need to get that money back as quick and as in abundance as possible, less for myself, but more for the next fund manager who wants to come along. I was on a call last night and I said, there was a time when we used to meet in the urban investment group cafeteria at Goldman Sachs. And while the cafeteria was vast, there were only 15 Black people in VC and only 2 of us were women. That was it. And that was just in the 90s. So let's not get it twisted. That was that long ago. And so to now be able to be on calls where we take up the whole screen and we're bigger than the Brady Bunch when we go to the View is absolutely fascinating. But I am for no reason absent of the mind that I have to not do this for myself, but I've got to do it for all the other folks who want to become GPs, because we are that precedent, which is stressful, but it's real because the system still looks for returns, it looks for wins, and there's always a reason I think they're looking for us to not be as successful.
Yeah, and just quickly to add to that, when I was raising Impact America Fund 1, which was a smallish $10 million fund, it was interesting. I had probably more offers from large institutions to actually come in-house with them to do the work in-house than them wanting to write large checks to support me independently. And it's, the Stanford case study that you all mentioned at the top of the call talks about the decision-making process as a small fund manager. $10 million, the fee on that, you can do the math, isn't a lot of money to pay yourself and another person. I've had an associate with me in Fund One. And so the temptation to go in-house, but the notion of going in-house with this type of mission didn't sit well, right? And so the intentionality to figure it out with a very, very small budget, to stay independent and get to Fund Two, not because I couldn't have found an easier path to make more money. It's because of what Melissa said. This mission is too critical and too important, A, to demonstrate it can be done so that others follow and do it, and B, to have control and agency over the mission and what we're trying to achieve for our communities. And honestly, Black and Brown people haven't been in a position, in many cases, when you think about the innovation economy, to be able to dream up and reimagine what we want for our own community. So it is more challenging. It is harder work. Melissa's probably could be retired 5 times over by now, but she gets up every day and she does this work, and she's mentoring folks, and she's showing up and she's advising folks. And we do this because we are passionate about seeing change and making this path a little bit easier for folks that follow.
Thank you both. Michelle is here to just in time pass it on to some audience questions.
That was so powerful. And thank you both for just existing, right? Like for trailblazing and doing this work. And so I'm going to ask a couple of questions from the audience. So we've had a lot of discussion around investing in diverse and minority ventures. Can you discuss the role of people who represent those communities making those investment decisions?
I'm not sure what was intended, but I'll do a really quick story and then let Kesha talk about it. When I first started investing, which clearly was a while ago, I had someone say to me, "I'm not sure I trust you." And I said, "Hey, fair enough. We've got to get to know each other. Why don't you trust me?" And they said, "Well, because you represent those communities. And I'm not sure you have the capacity to help them." And so I would say, just to that question, we have a long way to go because I think that it just speaks to the isms that exist around being female, being gay, being Black, being whatever, that people cannot distinguish, and that they have literally put us in a crab basket and don't know that we have the capacity to really care for ourselves. So I would say, I'm not sure this is the nuance of the question, but I would say just the significance of presence, not necessarily because of who we are individually, but collectively, is a powerful thing just to begin to move the narrative on who has the capacity to invest in what.
Yeah, the only thing I'd add to that, because I'm not sure, I wasn't as clear about the question, but the capacity and the cultural competency to invest in what and what comes with growing up. I grew up low income in a wealthy county. I grew up low income in Orange County, California. And so having the capacity and the cultural competency to understand the difference and to appreciate the difference, to appreciate the beauty in being low income and having to innovate because of lack, but also appreciating the benefit of having access to resources, right? And so that doesn't come, you can't wake up and figure that out. You grow up with it, you live with it, you work with it. And so Black and Brown people in this country are uniquely positioned to solve these big systemic issues, given the unfortunate, economic divide in this country.
Yeah, I think that's really interesting because there is this perception. I mean, you're fighting against stereotypes, right? You're fighting against what people believe you are and what you represent. But we mentioned this in our previous conversation, that there was a report that came out that historically, like, white fund managers are performing at the same level as like women and people of color fund managers. And this perception that because you're a woman or a person of color, like, and don't have access to these networks and don't know how to invest, that's not true. So this question is pointed to Melissa. You mentioned gap funding. How unique is it that your organization compared is compared to other investors, does this address social equity more effectively?
We shall see. I can't give a definitive answer, unfortunately. But I will say that if we look at equity in a true investing sense, there's several of us who have come out now with funds that also have alternatives. So myself, Jewel, and several others are looking at not just equity. And I think while we're doing it differently, there is an undercurrent that says if we can help a business create wealth for themselves and their communities without taking equity investment, but still getting a market or market plus return, then we want to be able to do that, because we hope that we're empowering the entrepreneur to be able to make decisions, but also creating social equity as the business is able to grow and accumulate wealth itself. But I think it's still too early for us to tell if we're doing it definitively. And I also want to be really clear, over the course of my career, I've invested a lot of money, but right now we're working with 10 million bucks. And that is certainly not going to counter the cost of racism at 16 trillion. So I think collectively, writ large, we're probably nowhere in terms of a drop of a bucket. And respectfully, even with the success of Kesha and her fund and being the largest Black woman, we need probably 100 of hers to get where we need to be. So I do not want to exhibit hubris in terms of what we've accomplished, because I think we're so far off from a systemic perspective.
So the next question that's coming up: to resolve the systematic issues in lack of access to capital, including social capital, I agree that community building would be the first critical step. However, sometimes it's very exclusive and they tend to be staying within the community. What would be your advice to open doors mutually and pursue collective impact?
Go ahead, Kesha.
No, go ahead.
I was going to say, I'm trying to read there, but I would say, I think there's lots of types of community building. So I would say, within 1863, we've got over 10,000 entrepreneurs. So there's an element of community there. As I alluded to before the call, there's an organization called Black VC, and there's community there, and it now has chapters rolling out across the country. Kesha and I have known each other for a long time, so there's community there. I think for me, from a cultural perspective, there is community building amongst kind of your portfolio. Then there's community building amongst the GPs, just because we're probably going to see deals and share deals. Kesha and I sit on several different groups that meet together. So I would just say, as a Black GP, we are lucky and fortunate that there are many communities that we get to be in that are exclusively focused on our work, that are exclusively focused on supporting Black and brown entrepreneurs. And then I would say are also parts of communities where we may still represent that oneness, but we are part of a much larger sector that my sense is certainly Kesha's presence is beginning to change who gets a seat, and also hopefully changing what that conversation looks like around what's a good investment.
Yeah, and I'd add to that. We have our fund too, and I celebrate raising $55 million because it was painful to do that, but that's a small fund in the larger scheme of things. But the important thing about the fund is that we have 67 LPs, and those LPs represent some of the largest foundations in the world, some of the wealthiest families in the world. And so it's been my mission, to what Melissa has said, is, I'll take the L for the team. I'll go out there and have these conversations and beat the drum and open the doors and have more conversations than probably most that raise funds have to have, because we're talking about something quite different than traditional investing. And so it's important for us at ImpactAmerica Fund, in addition to the portfolio community and the community, it's for us to get our impact right. We have to be in close proximity with the community, people on the ground doing the work. We're intentional about building community with our LPs, because if we can help our LPs see the value in the work and the value in community, and to unlock more of the billions of dollars in their endowment, then we're essentially helping, others raise capital. So I spent a lot of my time behind the scenes, behind the closed doors. Nobody will ever know it and see it, but trying to shake the tree and getting more of this money allocated to our community.
And let me just say, it is seen. So I want to personally say thank you to you, Kesha, because I think our Fund 1 at ATC3 represents some of your LPs, and they regularly cite you. I think it's no small feat of what 645 Ventures did because of you. And so I think there's also an element of community that some of us know and never know, who have paved the way as each various phases of this. And I think create a different blueprint so that 20 years from now, hopefully when Kesha is well retired on some island somewhere, people will still, beyond the case study, they will know all the communities that she has helped to be able to connect.
Thank you, Melissa.
Is there ever an element of like frustration when you're having these conversations with these LPs around like, you're basically like having to prove that you're valuable, or that these communities that they're investing in are valuable, and like reintroduce yourself and like validate yourself and like tell them that you went to an Ivy League institution and tell them that you've been an investor? Like, can you talk about that experience as you've entered these rooms?
That is like, we could have an entire panel on that, Michelle, because that's the painful part. The painful part is, my undergrad, and I'm going to give you the resume because of the conversation. I have an applied mathematics degree from UC Berkeley. I was a merger and acquisitions analyst at a top Wall Street investment bank working on multi-billion-dollar deals. I have a Columbia MBA. And then I've done all sorts of other things in between that, and that's still not enough. And so that's the painful part, to your point about the work of having to, the work of fundraising comes with the territory of being a general partner and being a VC. So that's part of the work, but having to explain and re-explain yourself and to prove yourself and to create a data room that has more data than anybody's ever seen in their life. As a $50 million fund that we've been told now by experts in the space that have underwritten many, many funds, our data room looks like a $500 million fund. Why did I have to create a $500 million fund looking data room when I have 6 people and I'm raising $50 million? So the same still holds true. As a Black woman, we're working 3, 4, 5, 10 times harder to get to, the same place as others. And so that's, to Melissa's point, not only are we behind, as we try to catch up, we're moving faster, but we're also working harder. And you can see why the exhaustion happens, the same for founders. When it takes a founder 2 or 3 times longer to raise the same $1 million or $2 million, you miss out on opportunities, you're tired as heck, you don't have the capital you actually need. And so it's this like weird effect that happens, but that's the tough part, Michelle. And I don't know, I show up at business schools, my own personally, but others. I'm speaking at Kellogg later today because I want to challenge young people around these perceptions that we have, because that's where the real change will happen, is when we get those negative perceptions and the fear of others actually standing strong in who they are out of our minds.
I'm going to say ditto. And that because I'm older than Kesha, I'm also angry. So I try not to answer that question too often. And I get angrier. Dare I use Quibi as an example of $1 billion lost, gone. That could have funded 200,000 Black entrepreneurs just based on the average loan size of the PPP, and it could have funded 23,000 plus Black entrepreneurs based on the average venture check in 2019. The opportunity cost that people are willing to make is absolutely absurd. And one footnote, and I don't say this to make anybody feel bad, but I cringe when I hear the term minority, because it is marginalizing for us, when indeed, not only in many states, including a place like Utah, where we have already flipped, and it is a minority majority state, so I use the term new majority, but certainly within the entrepreneurial community, with a 40% decline in white men starting businesses, and the number of Black women continuing to increase, and the number of Asians now increasing because of COVID, there is no way in the world that unless the landscape of who gets to make those decisions, to Kesha's point, based on their history, their understanding of community, and their cultural competency, are we going to yield the financial returns that we need as a country to be competitive. And so for me, this is not, let me check the box. This is if the majority of the country do not look like the current leadership, and they are part of communities and cultures that the current leadership does not understand, then why not move the heck out the way? And when it comes to entrepreneurship, why not allow those who have been entrepreneurs, who have been investors, who have some experience, lead the way in communities that we deeply understand that others never will? And that's both from a financial perspective and a non-financial perspective. To understand the journey of a Black female entrepreneur is like, people, I read Moby Dick. I was like, what is this? Call me Ishmael. Like, it is so complex that I think the innate talent that is overlooked are the only ones that are going to allow those companies to be able to grow. So it is angering from my perspective to be 52 and still fighting this battle, and even more angering for my 92-year-old mother who goes, oh my God, like, why is history repeating itself, and not in a positive way? So
yeah, I think we know the reason for that, right? But like, last question I'll ask, can you talk about one startup or one investment that you've made that has just re-energized you, right? Because y'all are doing this work, you're fighting to get this capital and then deploying it. Can you just one quick, I know we're running really short on time, but I want to end it on a positive note, because I deeply believe that we have the answers as entrepreneurs, as investors for our communities. And I think this is coming through innovation.
Yeah, we during COVID, we actually invested in this company in Q3 of last year, and then led the Series A round during COVID. The company's Care Academy. And Care Academy is a software, compliance and education training software that's used by home care agencies for their direct care workers. In this country, when you think about who the direct care workforce is, more than 60% of them are women of color, and many are immigrant women, and they're low income. And so as you think about these women showing up and taking care of your loved ones and your family members, and oftentimes can barely afford to feed their own families, that's heartbreaking. And there's a systemic issue as to why the system exists the way that it does. During COVID, and we're still in COVID, I think everybody's awareness around the importance of home care and home health care is heightened. And so this company has been around, been in existence. It's led by a Black woman who herself was a direct care worker at one point. She also happened to have her education policy degree from Harvard. And so it's a fantastic company because of the leadership, because of the mission. And honestly, there's a huge market opportunity when we think about where home care is going and its integration with healthcare. But when we look, I just came out of a 2.5-hour board meeting yesterday, and I was energized, Michelle, because the leader, Helen, who leads this company, is fantastic. She has 35 employees. It's a diverse group of people. She has a diverse board. She has 3 or 4 Black women who are on the board as official members and observers. And it's showing how when you get that part right, she's scaling quickly. There's mission orientation. The company's centered around these women as direct care workers, and they're making money while they're doing it. So she's like, for me, hitting the holy grail of what we're saying can be done. And then the team is showing up talking about policy that would affect change in Medicare and Medicaid. And that's what we're talking about. It's funding these founders that, yes, have great business ideas and they're business savvy, but they also, like Melissa and I, care about the community, and they're building these businesses, not just for their own wealth creation, but to really change and affect the way that industries are controlled and dominated, and impact the workforce of people who we care about in our community.
I'll do quickly because it's in the same vein. A company we invested in who's now doing their subsequent round is called Medhall, and they're in Memphis, Tennessee. It's run by a Black woman, Erica Plebia, and she focuses on providing transportation to Medicare and Medicaid patients, which has been critical during this time. And why we're excited about is not just because she's doing where many other places, no public transportation, can't get there, takes 3 hours. She did not lose a single driver in this process and actually increased and created jobs during COVID. So really proud of her. And now, because we were one of the earlier investors, she's now going out and raising $1 million plus round, which is extremely important in the continued trajectory as she tries to go beyond Memphis. So really excited about her.
It's powerful. That's powerful. Jenny, I'll hand it over to you. Thank you all so much for everything.
Yeah, I think we're out of time. I know there's another panel coming back, but what a wonderful conversation. Michelle, I'm so grateful that you came back with us. And we're learning so much as I'm trying to bring in the Columbia Business School community and everyone into Level. We've learned so much from you today, Kesha and Melissa. Thank you. We encourage everyone who's listening to keep learning and join this movement with all of us. Let's start shifting these generations of capital in a new direction together.